In this video, we will walk through the key tax rules that part-time and contract workers in Denmark need to understand in order to stay compliant and optimize their after-tax income. Whether you are a student working a few shifts a week, a professional juggling multiple part-time roles, or a freelancer delivering services on a contract basis, the Danish tax system has specific expectations and mechanisms that apply to you. We will focus on how income is classified, how it is reported, which deductions may be relevant, and what practical steps you should take to avoid unexpected tax bills. While this is not personal tax advice, it will give you a structured overview of the core concepts so you can navigate conversations with SKAT, your employer or your accountant, more confidently. Let's begin with income classification. In Denmark, most part-time work is considered regular employment income, even if you only work a few hours a week. This income is subject to the same tax principles as full-time employment. It is reported through the electronic income register, your employer withholds a tax and labour market contributions, and your earnings are reflected automatically in your annual tax statement. From a tax perspective, the difference is not about how many hours you work, but whether you are an employee with an employment contract or operating as an independent contractor or self-employed person. If you are hired as a contract worker but function like an employee, for example, you have a fixed schedule, use the company's equipment and are under close supervision, the tax authorities may still regard you as an employee regardless of what your contract says. This distinction matters because employees are taxed through withholding, whereas independent contractors typically need to manage their own tax payments and reporting. For genuine independent contract work or freelance activity, your income may be classified as business income or as B income, depending on your setup. Business income is relevant if you run an ongoing activity with a degree of independence and risk. For instance, if you have multiple clients, market your services, and potentially incur business-related expenses. In this case, you might register as self-employed, keep formal accounts, and be responsible for VAT registration if your turnover exceeds the relevant thresholds. B income, on the other hand, is often used when you receive fees or honoraria without being employed, such as occasional consulting, teaching, or creative work, and where no tax is withheld at source. With B income, you must typically make on-account payments of tax and labour market contributions, and you need to ensure that your preliminary tax assessment reflects this income to avoid a year-end underpayment. For many part-time and contract workers, one critical tool is the preliminary income assessment, your Forskuds opgørelse. This is where you estimate your annual income from all sources, including part-time jobs, freelance contracts, and any benefits or other taxable income. If you take on an extra part-time job or secure a new contract mid-year, it is important to log into the tax system and update your preliminary assessment. Doing so helps ensure that sufficient tax is withheld during the year and reduces the chance of a large residual tax bill later on. Remember that your tax card or SKAT determines how much your employers or payers withhold. If you have multiple employers, it is typically advisable to assign your primary tax card to the job that provides the highest and most stable income, and a secondary card to the others, where tax is often withheld at a higher rate. Failing to coordinate your tax cards across multiple part-time roles is a common source of surprises when the annual tax calculation is finalized. Beyond income reporting, part-time and contract workers should be aware of key deductions and allowances. Many deductions, such as employment deductions, apply regardless of whether you are full-time or part-time, as long as you earn employment income. If you commute a significant distance to work, you may qualify for a travel deduction, even for part-time roles, provided you meet the distance and days worked criteria. For contract workers and the self-employed, deductible business expenses play a central role. Expenses that are directly related to generating your income, such as professional software, equipment, a portion of your phone and internet bill, and in some cases home office costs, may be tax deductible if properly documented and allocated. However, the rules can be strict, and personal or mixed-use expenses often require careful apportionment. Keeping organised records, including invoices, receipts and contracts, is therefore essential for anyone relying on freelance or contract income. Social contributions are another important element. In Denmark, the labour market contribution, AM bidrag, is typically 8% and is levied on most types of earned income, including salary, freelance honoraria and business profits. For employees, this is usually withheld automatically. For contract workers with B income or business income, you are responsible for ensuring that this contribution is included in your tax payments. Overlooking this component can lead to a mismatch between your assumptions about net income and the actual amount you receive after taxes and contributions. For international workers or individuals new to Denmark, there are some additional considerations. If you move to Denmark for part-time or contract work, you must ensure that you are correctly registered with the tax authorities, obtain a tax card, and clarify your tax residency status. Being tax resident in Denmark generally means that you are taxed on your worldwide income, while non-residents may be taxed only on Danish-sourced income, subject to any applicable tax treaties. Contractual arrangements with foreign clients can raise questions about where the income is taxable and whether you need to report it in Denmark. So reviewing cross-border situations carefully is important. In practical terms, the best approach for part-time and contract workers is to be proactive and disciplined. As your income sources change throughout the year, review your preliminary assessment, update income estimates, and check whether the right tax card is used for each payer. If you receive B income or operate as self-employed, consider setting aside a percentage of each payment on a separate account to cover future tax and social contributions, rather than relying on memory or year-end adjustments. When in doubt, use the online tools provided by SKAT or seek targeted guidance from a tax advisor who understands the specifics of Danish law as it applies to flexible work arrangements. To summarise, the Danish tax system treats part-time employment broadly like full-time work, with withholding at source and standard deductions, while contract and freelance roles introduce additional complexity around income classification, self-reporting, and deductible expenses. By understanding whether you are considered an employee or an independent contractor, monitoring your preliminary tax assessment, coordinating multiple income sources, and keeping thorough documentation, you can reduce uncertainty and manage your net income more effectively. If you are planning to expand your part-time workload, shift into more contract work, or combine employment with freelance activity, take the time to understand these rules up front. It will help you make better decisions, avoid unpleasant surprises at tax time, and focus your energy on developing your career or business within Denmark's flexible labour market.